Hi, my name is George Dagnino, and I am the editor of the Peter Dac Portfolio since 1977. In this video, I'd like to show you the behavior of commodity prices when the economy slows down. In a previous video, I showed you what is the long-term trend of commodities as interest rates move above or below inflation. That's the basic secular long-term trend. But commodities behave depending on the trend of commodities prices, depends on the growth of the economy. Let me show you how. The way I approach the issue is by using the concept of business cycle, and I divide the growth of the business cycle, is how the economy grows relative to its long-term potential, which is this one, in two basic periods: periods of stronger growth above potential and periods of declining growth and growth below potential. So let's see now what happens as of this recording, which is in November 2012. The economy is slowing down quite visibly, and now let's see what happens to the commodity prices during period 3 and period 4, which, by the way, is quite typical behavior. This is an excellent indicator that tells you what happens to the economy. The gray lines here and here, a period of recession. This is the recession of 2008. Again, we are in the 2012, and look how this is manufacturer and new orders, non-defense capital goods, excluding aircraft, is a very sensitive piece of information, and the rate of change as the growth of new orders declines, you know that the economy is slowing down. And the more the orders decline, like here and here, the more it's quite a safe bet that there is a recession looming. But we don't really care about recession or expansion. What we really care that around 2011 here, okay, the economy started slowing down. So we went, as I showed in the previous chart, we went into a period of slower growth. Again, the important date here is 2011, because now I want to show you what all the major commodities have done from 2011 through 2012, November 2012. Again, this is the expansion part of the business cycle. This is the slowdown pace of the business cycle, where again the 2011 is the crucial inflection point of the business cycle. Okay, this is the commodity index. This is an index of all commodity prices, and as the economy came out of, orders were strong and the economy came out of a recession of 2009, you can see that commodity prices went up. I always like to draw a trend line to give me an idea of what the trend is, and they are very useful indicator, as I discussed in other videos. But then look what happened. Here's 2011. Okay, this is 2010. We go 2011 and 2012. I told you to look at that date, 2012, when orders started slowing down. Look what happened to commodities. The slower growth in the economy, there is less demand for commodities, and commodities are the most sensitive asset that gives you an idea how strong is the economy. And when the economy slows down, you can bet your house that commodities are going to weaken. And in fact, I mean, they're volatile, they're going to go up and down, but from 2011 to 2012, October, mid-November, really commodities, the broad indices of representing commodities, are really not offered a great investment. Let's see now how other commodities are behaving. We saw the index, the Broad Commodity Research Bureau Index, strengthen and then weaken. But if you look at copper behaved exactly in the same way. Copper went up, and forget about China, all that talk that is just a diversion on what really is happening. The U.S. economy strengthened and copper strengthened. Then the economy when looking at orders for durable goods, the growth peaked and then declined, and look what happened to copper. And so even copper, which is, you know, an international commodities, weakened beginning in 2011. Now you say, why, George, you don't care about, you know, you look at a U.S. economy? Because believe it or not, all the major economies are perfectly, the business cycle of all the major economies are perfectly synchronized. I show this in the Peter Duck portfolio once a month, how all the business cycles, they're just tied together. So again, the business cycle strengthened. The index, in particular, the copper, started rising in 2011 around April, May. The orders started slowing down, and sure enough, copper started going down. The trend is quite clear, is down. Let's look also to another commodities that people get emotionally involved with, which is crude oil, the shortage, the energy. But again, crude oil behaves very much like copper, like most other commodities. The economy strengthened and crude oil went up. In the middle, around April, May, June, the economy started slowing down. There has been a lot of volatility, ups and downs, but the trend of crude oil has been down. So when you see an economy that slows down, as I said before, you can bet your house that the trend of commodities is going to be down. Or to put it in an investment viewpoint, is not the place to invest your money, because A, they are very volatile, and B, in a slower growth economy, the odds are for commodities, all commodities, to decline. Well, let's look now at the ultimate commodities, you know, the commodities that everybody talks about. You know, it's like money, is a safety, and we want gold, invest in gold and all that. Gold is behaving exactly in the same way. The economy strengthened, and gold went up like copper and everything. The economy weakened, and sure enough, gold behaved like crude oil, like copper, like metals, like agricultural, and everything else. So if you see a slower growth economy in the near term, again, this is a business cycle forecast, in other words, over 2 or 3 years, the slowdown of the economy, then you can be sure that commodities are not going to do much. So when is obviously the best time to invest in commodities? Well, is when the economy gets out of a recession and start picking up strength, and as you saw, all the trend of commodities is up. That's the sweet spot of commodities. But when the economy slows down, the odds are, whatever commodities you choose, the odds are that it's not going to perform very well. Well, thank you very much for listening. And again, the basic point of the presentation is that commodities, when the economy slows down, when the economy starts, the growth of the business cycle declines, and then the growth is below par, then commodities are not good performers. They are not good investment. And I don't care if they're called gold, or they're called copper, they're called crude oil, called metals or agriculturals. All commodities behave in the same way from a business cycle viewpoint. Now, over the long term, I made another video showing how the Fed impacts commodity prices over the long term. But the two trends have to be put together if you really want to be a good, solid investor in commodities.